Everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications for when we go live, tap the bell. We're getting things rolling here today. If you're not yet a member of our free options trading group, the link is below. Also, the link to our Discord is below too, that we recently launched as well. If you're here right now, say what up. Matthew. Let's see who we got here. Dorian. Amen, Ray Lee, Carmine, William, Jeff, Crypto Slice, FC. What's going on? What's going on? What's going on, everyone? Shadow Drone up 12%. Nice. Eric James, Eric Wilson. Two different Erics. Welcome, Bill. Looking good. He had dark theme TOS. I was gonna think or swim. I'm gonna talk to you guys about that. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Josh, what's up? What's up? We're rocking the new setup today. We're rocking the new PC. Let me just check my settings here. Okay, looks like. Okay, looks like. Sorry guys, just doing some testing here. Not used to being on a Windows PC here. Tobin, what's going on? Got paid. Bill got paid. Eric stayed cash. Other Eric James got paid. Easy got paid. Audio is clear. Yeah. What do you guys think about the? Do you guys prefer the light theme or the dark theme on Thinkorswim? I was playing with it, the light theme. I normally, the only reason why I use the light theme is because on Mac it was way better for video purposes. But if it's coming through pretty well on pretty well on dark theme, I'm gonna keep it there and get my eyes break. You know, because the only reason why on Mac for some reason the charts look like they look blurry. They look fuzzy. If that makes sense. So, you know, we're getting things rocking here. Let's see here. Yeah, we got, you know, we're only using 21% memory, 12% CPU. So we're coasting here. We're coasting, doing good. We're doing all right. Okay, you guys said dark. Yeah, better for eyes. Yeah, all right. So I'm gonna stick with the dark theme then. Definitely appreciate the feedback. Can you guys hear me okay? I'm guessing because you guys have been responding. You know, looks like I have it streaming on my Mac right now. I guess we are 1080p. Things are looking, you know, pretty good. You can see the numbers okay. Everything looking good. Just give me some feedback there before we get into the stream. Yeah, today Dow's up over 100, S&P's up 17, NASDAQ up 60. You know, just pretty much a continuation, as you can see on S&Ps from Friday when we had the huge rip, and then today we had even a bigger rip. Even though, however, the last couple hours today were definitely pretty interesting. Greg, what's going on? Nice to see you. What does the shirt say? We got if you're from Chicago, you get it, or if you're in the hip hop or rap culture. So you know, not to plug or anything, but it's actually this T-shirt's from one of my buddy's companies. He's got up here in Chicago. So, but yeah, we went up. We had some, you know, consolidation in the morning. You know, the market was determining where it wanted to go, and then we just kind of went up and up and up until 2566 on the S&Ps, and then, you know, we kind of retraced some of that. Yeah, they're all Chicago Artists FC. To get to my account, I'm down today $80 unrealized. Microsoft. And let's get this orders here so you can see what I did. I didn't, as you can see here, I didn't close any orders today. I just did opening, and I'll go through my trades here. If you are in Chicago, eat pizza will be my kind of shirt. Yeah, deep dish, Luminati's all day, guys. Luminati's deep dish. I get it delivered to my house. It's fantastic. You can't beat it. I know New York. I know people from New York say they got the best pizza, but I've been to New York, and we'll leave it at that. So today I added to my Microsoft position, and I traded IBM. I didn't want to get too aggressive today, mainly because of the price action, and the other thing was I actually had to go downtown today I was downtown from like 12 to 2, and I didn't want to get too heavily involved into something. Tomorrow I'm actually going to be taking off. It's my son's birthday, the one that bombed my stream on Friday. It's his birthday tomorrow, so we're gonna spend the time with my son, my family, and hang out. So I didn't get too aggressive. You know, I have some things going on. Like I said, on Friday I opened up a Microsoft Strangle. On Friday I bought the 100 put and the 105 call, and that, you know, seemed to look like it wanted to work out until we got this huge spike. When it came up here to, let's see, what time was it? 10:04. So right in here where it was kind of just chilling, I added a call to it because I also had the bearish IBM trade on it. So I added the 105 call on that just in case we get up there, because if you're looking at Microsoft right now, and it did close, you know, Microsoft, 102. I've been playing bearish on this 102 mark right here for the last week or so. I've been playing this, and it broke above. As you can see, we went up to 103, and when it was at 102.40 or so, I put the position on. I added another 105 call, so I have two 105 calls, one 100 put. And the reason for that is to kind of balance out IBM, because I put another bearish trade on IBM, which I'll go over here in a second. So as you can see, I got two calls, one put, and I'm currently down on that position on both of them. Actually, is where I got most of my losses today, mainly because we Microsoft is unchanged today, 0.13. And if you're looking at the option pricing, if you're holding overnight and you're swing trading like I was doing, and the stock goes up, goes down, and is actually unchanged, as you can see here, we're like, up 13 cents. You can see out of the money, and even in the money, you just got slaughtered. Puts, look at those puts, slaughtered in the money. Puts got slaughtered. Out of the money also, I believe, let's take a look here. Yeah, IV, implied volatility also went down a bit today on Microsoft. Just a little bit. It's starting to come back up though, which is very interesting. Which is very interesting as in terms of like the VIX and stuff. The VIX closed green today, even though it was down. Kind of some very, very mixed reactions right now in the market. IBM, I put another bearish trade on IBM. The reason why I did that, I had the 116 put, 120 call. Looked like it wanted to kind of head lower there as well in IBM. IBM, I was thinking if we get a push towards 120, it's going to go pretty fast to 125. So I felt pretty protected on that. And then, the reason why I added the Microsoft call was to balance it out. But IBM is actually fairly balanced. If you're taking a look at the options here on IBM, I'm right there. It's pretty balanced right there. So I have the 116 put. It did go up, but I mean they're pretty much the same. They're pretty much the same price. I'm down a little bit on it right now. These are going for like $1.20, and I paid $1.42. So we're not down big on it. And when we get a swing, if we get a swing up or swing down, that will definitely come through. I do think under $1.50, I really do think I got good pricing on it. Even though it did go against me, even though we did come up, but we're starting to come back down. So, I'm really not sure which way the market wants to go. I mean, obviously the market's going to do what it wants to do. If the S&Ps, really, does it look like it wants, obviously it looks like it wants to retest 2,600. Next week we have big earnings plays, which we're going to go over in just a second here. Earnings season is on deck next week. Anyone, no problem. Benito, what's going on? Looks like it wants to make a recovery from this dip. And as you guys know, we talk about it on the stream a lot of times that even though if we go down fast, we can rip up just as hard and up just as quick. As I showed you, like a chart from 2015 when we ripped. Yes, it's more choppy. Like this was more controlled, just way down. Yes, there's a lot more chop on the way up because there's a lot of resistance. There's also a lot of buyers that were trapped. A lot of people that weren't getting the best price. That were saying, okay, now that we're back up, I'm gonna take some of my risk off the table and we'll go down a little bit. So on the way up, it's always more choppy, as you can see here, but I think the chop is good because then we get a two-sided market. Like when we were heading just down from, once we broke below, like let's say 2,600, we went from 2,650, we broke below 2,600, which was bouncing off support. We broke 2,600 and then we just went down every day for like 10 days straight. We went down. And what happens for option buyers and sellers is it gets really tough to trade because the options get really expensive, especially the calls. The calls get really expensive because they're anticipating a bounce back. And then the bounce back doesn't come, and those calls all expire worthless. And then the people that are selling puts or buying puts, the puts are getting more expensive. And if you're selling puts, it's hard because we keep going beyond the expected range. Like we keep going beyond the expected range. If you're a premium seller, you want to stay within the expected range so that way you can make money. If you go beyond the expected range, then you start losing money. And that's tough. It's very tough. Like options trading, we prefer markets, whether you're an option buyer, option seller, you prefer it goes up, goes down, trades in a range like this. It's a nice zigzag. If you've been trading in October, very nice zigzag. Very nice two-sided action here, bouncing off support, resistance. This is like amazing chart to trade. This is an amazing chart to trade. And if you're making money on this, like, be grateful that we had. I'm not going to say we had an easy chart to trade because this is definitely hard when you're in the thick of it. But all things considered, like it's easier to make money on a chart like this than it is just like going straight up like this. I know it seems kind of weird, but if you're trading options, a chart like this is way more preferable and way more profitable too. Way more profitable, because, as it's going down, premium is getting more expensive. As it goes up, premium gets cheaper, allows you to reload. Premium goes, so, you need some updates here. Like when we were heading down here, it was getting so expensive that like I was laying off. When we were starting to get towards down here, I was starting to kind of take my gas off the pedal because if we were going to get some updates, and we did, premium got crushed here. Like Greg was saying, premium was just crushed. Like my Microsoft Strangle that I held from Friday, crushed. That's why I try to keep trades rolling, keep things moving. That way you take advantage of when premium is cheap, and then you can sell when premium is expensive versus loading up when premium is expensive and selling when premium is cheap. So it's market. If market's all about rotating, up, down, up, down, up, down. We can trade higher, we can trend higher, we can trend lower, but it's all about rotation. Everyone got paid. Josh's gonna watch the stream later. Lucid, take it easy. If it's your first time here, say what up. Definitely want to meet you. We're getting into it. So IBM, IBM I was looking for. Sorry, I got some of these mapped here. IBM, before I got off topic here, IBM I was looking for it to break 116 and possibly head to like 114, 112 area. I don't know if it's going to get to 112 area without it. And I want to go over it. Like people were like, why was the market going up today? Why would it go up tomorrow? There's not really any catalyst, you could look at. There's some news. Trump is actually going to be having a meeting. He's addressing the nation tomorrow at 9 p.m. Eastern, if you didn't know, and it's in regards to building the wall. But other than that, really nothing. I mean, obviously, I don't think building the wall is a catalyst for the market to go up, but that was, there wasn't really a whole lot going on today. But if you think about the bigger things, like, we went down a lot. The S&Ps look like it wants to recover a little bit here. S&Ps look like it wants to recover, and we're coming up on a big earnings season, and I want to show you guys. So if you guys don't know or are familiar with it, there's a website called Earnings Whispers. I don't know why they named it that. It's kind of weird, but they did. But if you look here, as you can see, this week, today there was only one earnings report, really light this week. But if we're looking at next week, let's go into, Julia says hope for China deal. They went to China today. Yeah, I try not to get caught up. That's the other thing. I try not to get caught up in the China deal because I feel like whenever the market goes down very much, they say, oh, there's a trade deal. But out of the 4 or 5 times that they've said that, how many times have we actually reached a real agreement? How many times have we reached an agreement on China? And then Trump will tweet stuff like, we're making billions on tariffs, So who knows? Usually when they say that, it's a catalyst for it to head lower. Like it goes up, and then it just goes way down, like really fast. Billy, what's going on? But so if you're looking at next week, if you're looking at catalysts here, next week all the big banks are reporting. So if we're looking here Monday, we got 63 earnings before open, 65 after close. We got Citigroup here. Some other stuff in here. But Tuesday, JP Morgan, Wells Fargo. If you're looking at next Wednesday, Bank of America, Goldman Sachs, BlackRock, PNC. So next week, we really kick things off. Thursday, we got Morgan Stanley. And then next Friday, just a bunch of other companies. So, and then if you're looking at the week after, Johnson & Johnson, so next week, the market is really going to really kick off earnings season. So from next week to early January, we're going to have nonstop earnings. And like I was telling some people here that, this is going to be a very, 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 very important earnings season because if the market drops so low, if earnings are bad, like we can definitely return back down to here. Like if the banks are reporting bad earnings or, bad guidance or whatever the case is, we could easily head down back into here. If earnings are good and we don't move up and we just stay the same, that would worry me too for recovery. Like if the market digests earnings and we don't move up or down, let's say we just stay the same, that would be troublesome. So, going into this week is not really what the catalyst is. I think whatever's happening now is building into next week, building into a possible trade deal. The government is still shut down. Trump says that we're not, we're still going to still be getting tax refunds even though the government is shut down, but I don't know if that's true or not. So like a lot of people ask me like, hey, where do you get your news and what do you do about news and like stuff like that? And really, I only just to clarify, I really only trade big events. I know what's going on with politics, but I don't really try to understand or boil down into the very specifics of the China trade deal. Like if there's a deal, great, we'll make some money, stocks will go up, it'll be good. If there's no deal, we're still at where we're at now. So it's not really, you can speculate, but you hitting the timing, it's kind of like when you try, like people trying to time a buyout, saying, oh, I think this company is going to get bought out soon, so I'm going to buy calls for like 6 months out. You're holding these calls for 6 months, and you just see it wither away due to theta. Those calls expire, let's say, then they come out, oh, okay, they're still rumored to be bought out. We're going to buy more calls. And then you wait. Those expire. And then you say, forget it. I'm not going to do it. And then after couple months after you let both those positions expire, then they get bought out. So it's like you can't time it. Like, you can't time those kind of events. Like, you can't time a trade deal because there's so many things outside of our control. Like, that's why you just gotta trade the flow. You gotta go with the flow. You gotta trade the options. If the market's going up, you want to be bullish. If the market's going down, you want to be bearish. It doesn't mean you have to be long-term bullish, long-term bearish, or whatever the case is. It is what it is. Matthias, off topic, but I took your advice on Disney and turned it all in today. Congrats. Made some money. This Wednesday, they released the minutes from the last Fed meeting. Okay, good to know. Banks definitely will be a catalyst if they announce good earnings. Now, if you, or even if they announce bad earnings, like if you're taking a look at Goldman Sachs here, I mean, we've hit a high of 275 and now a low of 151. And from 230, from 233 area, it was nonstop bleeding. Like, this thing got cut 30-40% in a matter of weeks. Like, weeks, It was trending, we were obviously heading lower. And this is one of the other things that I was saying, like kind of an indicator of a weak stock. And one of them was Facebook, we talked about on Friday, was when they start making like lower highs like this. We had a triple top up here, and then we have a lower high here, a lower high here, a lower high here, and then it tried to recover, but then it did break above, but it's still at where it was. So in August, it hit the same price it was back in April, and it didn't get above that, and then we started going lower, started getting lower, and then one final push. As you can see, like, charts are very misleading sometimes. Like, they had one final push. People think, oh, we're gonna push from 208 back to 250, 275 area pretty easily, and then look what happened. Like, people were loading up, and then they just lost it all. So that's why you just gotta play in a market like this. You just gotta play it low and slow. Try your best, protect your portfolio, protect your cash flow, because things like this happen. Like, this is terrible. This is disaster. And if Goldman Sachs, I don't think they will, but if Goldman Sachs reports bad earnings, which it's not likely. It's not likely. But let's say they do. We're going to be in big trouble. Bank of America, same thing. Went from 29 down to 22. I mean, for a $20 stock, I mean, that's humongous. To drop $7, drop $6, $7 like that, 30%. I mean, it's crazy. Morgan Stanley, not as bad, but I feel like they're not as big as some of the other ones, like PNC, PNC as well. I mean, that was 130. Not as, I mean, it's pretty dramatic. I mean, still 30-40%, but as you can see, like, remember I was talking about a couple of minutes ago that when the market was going down, options kept getting more expensive, and here's implied volatility right here. Implied volatility, as you can see, just kept spiking, kept spiking. And actually, implied volatility, if you're looking here, it's more than what it was on earnings. I mean, that's how serious this thing's got. When this sell-off happened, if you look at Goldman Sachs, look how high this was. Look at how this was versus when Goldman Sachs has earnings right here. So right down here, Goldman Sachs had earnings. Right here, Goldman Sachs had earnings. You can't see that, but this is crazy. This is just crazy. Implied volatility is just through the roof. This is at probably a multi-year high easily. If we're looking, yeah, I mean, multi-year high. I mean, it's nothing even touched this in a couple of years. Granted, I mean, 2017 was 2017. The implied volatility was single digits on Goldman Sachs. So, I have read banks doing bad, so they should report poorly. Yeah, I mean, I think it's all about guidance, and I think it's all about like people paying back their debt, and it's hard to time that too. Like, if you guys watched The Big Short, he was shorting the housing market, which was unheard of, and these banks were allowing him to use these positions that were essentially against the banks, and he had to cash out. But it took a long time. It took a very long time for the 2008 financial crisis to happen. It took a long time for the day that the actual crash happened, like the first day. It took a long time. So, like, you know, they may report bad earnings, they may report that, but is it going to be enough to crash the market? Probably not. You know, it takes a long time. If you're gonna say I'm gonna short GS to 100 or $50, you're gonna be waiting. You're gonna be waiting a minute. You know, you're gonna be waiting a minute. If you watch The Big Short, I mean, he was getting squeezed. He was getting squeezed hard. You know, I think FC knows about that because I guess he got Michael Berry was in the area where he lives, I guess, or something like that. But I mean, you got to be careful. So in terms of catalysts, you know, what I'm looking for in SPX, and we're gonna start taking some tickers here from you guys. You know, I'm looking for a retest of hitting 2600, and we'll see if that kind of hits that. You know, we'll see. You know, we got some bullish momentum right now. You know, we'll see at 2600. Like before, like a couple weeks ago, we were saying, you know, if we break, well, more than that, like 3 weeks ago now, because we've had quite a bit of time, like a month or two ago, we were saying, okay, we keep hitting 2600. If we break below, we're going to see some real big trouble, which we did. Now, if we hit 2600 and we bounce back, that's one thing versus hitting 2600 on the S&Ps and going back up. You know, it would be very nice to get back into like a 2600, 2800 range again, just bounce between that all year, because then we'll just be making a lot of money. You know, right now we're kind of just, you know, we're making money down here and we're making money on the way up, but it's also the unknown. Right now it's kind of the unknown of, are we going to head lower? Are we going to head higher? Is this kind of just one leg up before we make another leg down and test 2350? You know, I'm also looking at a retest of 2350 as well, which is like a long-term support, which we just bounced off there. You know, we hit 2346, but, you know, at 2350, it bounced back up. Now we're at 2349 in a matter of, let's see, 1, 2, 3, 4, 5, 6, 7, 8. So 8 business days. And less, you know, 8 business days, and it feels like longer because we had all the holidays, you know, off. But if we're looking at Facebook as well, you know, this is one of those other stocks that I was talking about, you know, making lower highs on Friday, and kind of comparing it to, like, you know, when a stock keeps making lower highs like this, like, okay, here's the high here, here's the high, and people keep going long, and you have not been rewarded. You have not been rewarded. I mean, short term, if you're buying the big drops, you're getting rewarded, because Facebook, like Netflix and Amazon, is always one of those stocks that people want in their portfolio. So when it drops a lot, people say, hey, I want to buy the stock and put in my portfolio. They don't necessarily care about what the financials are, and they might not care what the financials are right now. You know, they're waiting for, you know, it's maybe a 20-year hold for them. It might be a 5-10-year hold, you know? So, you know, that's why you see when Facebook drops a lot, you'll have these rips, even though we ultimately still head lower. And looks like, you know, we need to break above. We need to break the trend here. This really needs to be trading at like 150 to really break the trend here. You know, at 146, 147, definitely danger zone. We're headed back there. But, you know, Facebook closed flat today, you know, only up 10 cents. And that's like nothing lately. I mean, as you guys know. Drop some tickers. What do you guys trade in? It sounds like you guys are just hearing me talk. You know, definitely want to get you involved in what's going on here. So far, things seem to be going okay on this new PC here. I think, let me try to get that. If you guys are not familiar, while you guys are dropping some tickers, I dropped some picks. Oh, I'm not on this computer. All right. Well, if you're in our Facebook group, you saw the picks. I am not on that computer, so I got a lot of things going on here. I'm still trying to figure out my flow on this setup. I had a pretty good flow on the Mac. It just didn't perform as well. AMD, I know some people made some money on AMD. You know, AMD had an 8% run today, and why isn't this? Let's go to here. Here we go. Got to link the two. So if you're looking at AMD, I mean, AMD had an 8% up day. You know, we had some movement here in the options, up 100, up to 200%. You know, the coil up was real here. Coil up was real. It was just recovering with the rest of the market. You know, at 22 will definitely really be the test here. 22. So we're getting kind of close to that. So it's kind of yet to see. You know, just because it goes up a lot doesn't mean it needs to go down, or doesn't mean it's going to go down. Just because a stock goes up, kind of like Microsoft, like just because Microsoft, you know, as well, you know, Microsoft went from 97 up to 102. You think, okay, maybe that's enough. It still went higher today. You know, barely, but still did. And AMD, you know, this could easily, as you can see, if the past rips, you know, went from 15 up to 20, and then kind of just did this kind of, like, just kind of chilled between 20, 21, 22, and just kind of hung out there. And also, if you're looking, they're one of the stocks that their implied volatility, it didn't really go down. It didn't get much cheaper today. So if you take a look at that as well, another interesting thing. Also, VIX is down today, but VIX is down today, but only, let's see here, how much was it down? Okay, so that's why this chart looks more dramatic, because we closed so low on Friday. It closed so low on Friday, and then it was ticking up pre-market, and then the VIX actually didn't move from where it was. And if you're looking at the VIX as well, you know, we're back between this range. Before we were bouncing in a, like, you know, 15, 16 up to 27 range, and then we were kind of just chilling in there. And then when the market, this is another example of when the market was going down, we kept going down. Look at the VIX, and now the market's going up. Now look at the VIX, and the options are getting cheaper. So just something, you know, for people that are not really sure about what the VIX is and kind of option pricing, you know, hopefully this helps. Matthew got paid, learned a lesson all on the same day. I mean, sometimes that happens. Getting paid while learning, nothing wrong with getting paid while learning. I've been looking at Melly since it broke 50. I don't know what that is. Is that I don't think I've traded this. You know, no one's actually brought this up in a while. The one thing that I don't like about it, and people that have been on the stream, you know, day one people, is this the volume. So volume is one of the things, you know, for, actually I got to add open interest here. Hold on, sorry guys. Forgot about open. It's just setting up my, I probably should have saved my, okay. So I look at volume, open interest, you know, has some open interest, but mainly volume today. Like if you're looking at these puts today on this stock, and you're looking at here on the calls, I mean, there's single digits on the calls, single digits on the puts, you know. So I typically just pass on this type of thing because it's difficult to get out. I mean, look at the bid and the ask. The bid and the ask over $100. You know, this is crazy. Bid 690, ask is 1040. You know, it makes it really hard. It makes it really hard to trade options. I mean, if you're going to do anything, you're probably going to want to hold stock. It's just too hard to make money. It's, I'm not saying too hard, but it's definitely risky. It's definitely risky. You know, when you're trading options, you don't want to increase risk. You want to find ways to decrease risk, because options is risky only if you allow it to be. And that's one example on why it would be risky. Linda, what's going on? Linda got paid. Netflix, Crypto Slice, AMD Strangle, probably not bad. AMD, before we get into Netflix, AMD, if we're looking here, yeah, I mean, you would probably have to skew it bearish or bullishly, because, you know, these are kind of expensive at the money to do something like a straddle or like a really close to at the money. You'd want to skew it in some way. The reason why I'm not using Tastyworks in this, on the PC, I actually have to open a ticket with support, or actually have to figure out something with my streaming software, is in the upper left hand corner on Windows, it displays my username, and I'm trying not to display my username, mainly because people try to hack my accounts and stuff. They tried to hack my Robinhood account a little while ago, and I've been trying to tighten up my security, and I don't want them to see what my username is. To if anybody here is in IT, I work in IT as well. You know, I own an IT business as well, And last thing I need them is just to have my username to blast the, automate that and figure out what my password is. You're not saying that they will figure it out, but why give them one more clue, right? Netflix has just been on an insane run, probably also because they also have, they also have earnings coming up. I mean, it does dip a lot, and like we talk about, like with Facebook, this is a stock that everybody loves. The company, they love the company. If you look at the financials, Netflix is horribly in debt. I mean, they're not making money. But it's one of those cult stocks that you don't understand why it's $300 or $400 a share. When you're trading options, not necessarily that it matters, but it does help to kind of understand that this stock most times, from my experience, I mean, correct me if I'm wrong, somebody, but it doesn't make a whole lot of sense. You just kind of got to move with the flow. You got to kind of move with it. And then, and this is an example as well of those lower highs getting broken. So we have a high here, a high here, a high here, a high here, and this looked like Facebook's chart. It wasn't looking good until just today. Today it broke through, and look what happened when it broke through here. Such strong force. When it got above this high right here, this 297, it just busted through. And a lot of it does have to do with people getting squeezed. A lot of short sellers getting squeezed on this. A lot of people are looking for the next big short, from $400 down to $100, down to $50. And yes, I mean, Netflix financials are not good. Netflix, they're horribly in debt. This year, they're spending in 2019, they're spending $10 billion just on content. They pay a lot for their infrastructure. They, this is not one of those stocks that you align financials with the stock price, because it'll just drive you crazy, because I don't even know how many times earnings they are on their PE is whatever. I don't, it's really high. It's crazy. But the market on Friday underpriced move. I mean, these were moving like 3,000, 4,000% today. Underpriced. The market underpriced the calls again, because these are up 300 or 500%. So it seems like there's opportunity here, but at the same time, you got to be very careful. After it happens a couple times in a row, the market gets smarter and they start adjusting the option pricing, where they start making the calls and puts more expensive, so it's harder to trade safe. Netflix and Tesla have definitely been are kind of like those stocks that I used to trade a lot of, but in 2017, early 2018. But I pretty much have been trading. I've been trading IBM a lot. I've been trading Microsoft a lot. I've been trading Alibaba a lot. It kind of shifted due to the trade war and stuff like that. And I was making money faster. Obviously, you could have made a lot of money definitely in here from 229 up to 315. I mean, in a matter of days, it's almost run $100. I mean, that's just crazy. Not saying it won't retrace, but you got to be very careful here around the 330 area, 320 area, which we talked about, months ago. You just got to be careful about this area up here. We're getting close. So there's definitely opportunity here. It's definitely a mover. But for Netflix, you got to trade it safe. You got to trade the Netflix got money back from Bird Box. Unfortunately, so unless they get a lot of signups, and I've been saying this for a long time, like Netflix should definitely charge more. Like the $10 that Netflix charges, doesn't really cover all the content that I watch. So I watch Daredevil, I watch Punisher, we're watching, Ozark, you watch all these other things, and then they have the movies like Bird Box. Bird Box, like over 45 million accounts watch Bird Box, and yes, they probably got some signups during it, and there's a lot of people that already have accounts, but to charge like $10-12 for all this content when cable and TV is charging $100, they could easily go to $40 and people will still pay. And also, they lose a lot of money because people share their Netflix passwords with it. They've been trying to crack down on. So people share their Netflix accounts. So that one account could be servicing 2 families, 3 families. So they're really only getting like $3 per month per family. It's like terrible. It's terrible. It's terrible. Like that's horrendous. That's why they're not making, like, they're pushing out really good content. They're the leader. I would say they're definitely the leader in streaming. They're definitely the leader in content in regards to streaming platforms. But it's really hard to make money at that. I mean, $40, I would pay that. $50, I would pay that. I mean, and people get mad at me. I've said this before, and people were like, well, we don't want to pay that. Well, then you fall off. It is what it is. I mean, they're making more money with less customers. Nothing wrong with that. I mean, that's what Apple did, except for Wall Street didn't like it. They're making more money per phone, but they're selling less of them. At the end, they're making more money, but they're selling less phone. I don't know. Wall Street's pretty finicky. As you guys are trading, you kind of find that out. And as you mature, if you're a new trader, as you mature in your trading journey, you'll see that as well. I mean, it's just nuts. I had Netflix since 2001. They charge $20 a month for 3 DVDs. Yeah. So if you're trying to match up Netflix with their financials to their earnings, to their stock price, it's not going to happen. It's not going to happen. The one thing here that makes it a little bit harder to trade is up after 315 here. Just to point out, they go to $5 wide strikes versus $2.50 strikes here. I don't know if that's on the monthlies too. Yeah, so they're going to $5 wide strikes. They haven't added them in there. Like I said, the market didn't anticipate the move. They just didn't. So it definitely is going to get very hard to trade it's going to be harder to trade when there's a $5 wide. Also, it gets a lot more expensive. Especially if you're doing spreads and stuff. If you're doing credit spreads and stuff, it gets also a lot more expensive. You get more credit, but it's also a lot more risk. So it's kind of up to your preference, really. But that's one advantage for the stock price going up this much. Now we're up at $5. We'll see if they add some lower price ones in there. But $2.50 wide strikes. But right now they're going to $5. So we'll see what happens. $79.99 for the lowest plan. Yeah, $8 a month. I mean, for a Netflix plan, they shouldn't be charging less than $20. I mean, easy. Don't you feel the same way as Tesla? Tesla's different. They do charge a lot of money for their cars. However, they do make quality. They don't, they do post profits when the government helps them out. So I guess that's something. They do have a lot of debt, and that's why you got to be careful about rising interest rates and stuff like that. But for Tesla, it's also a cult stock. A lot of people are betting on the future. They're saying it's got a 50 billion market cap and it's higher than GM and stuff like that. But if you think about it, GM stopped innovating a long time ago. Tesla hasn't. Now, whether it's right or wrong, it's at this point the stock price is speculation. Tesla, I mean, could it go to $1,000 a share? Sure. Could it go down to $50 a share? Absolutely. But the way that I see it, my opinion is if they have the orders for the cars, if they can fulfill the orders, they will be okay. If they, when they were having trouble fulfilling orders and they had there's fires in the warehouse and people are stealing information and doing this, they're gonna have a hard time. They're gonna have a hard time. Tesla losing rebate for customer. Crypto Slice, also GM is losing their rebate as well. Just because, so the government put a cap on how many rebates come out. I think, 100,000 cars or something, or 200,000 cars. I don't know the exact number, but if they sell X amount of electric vehicles or EV models, certain amount, then that rebate goes away, and it's per company. Which futures and stocks do you think will be affected by the higher interest rates in a good way? The reason I ask is buying opportunities. I don't know. That's a tough question because we've been at zero interest rates for so long. It's hard to say if there's going to be anything that's that's going to be positive out of it. I mean, obviously, like banks and stuff will make more money off of interest rates. I mean, I don't see a whole lot of positive. A lot of companies on Wall Street, they owe a lot of money to people. A lot of them. I mean, unless you're like Apple or Microsoft and companies that have been at it 30 years and are established in making profits every quarter, and you have a great market share that you control. A lot of these companies, you know, they're saying Uber and Lyft are going to make an IPO this year. You know, look at what happened to Blue Apron. Like, if you're looking at like companies that IPO'd last year that don't make money. What's Blue Apron? Yeah, I thought it was AP. I don't even trade this garbage. I mean, this is what happens. This is what happens to unicorns. And you guys saw it with Snapchat as well. It IPO'd. I mean, this IPO'd at like what, $10, $12, something like that. $11. IPO'd at $11 in July or June of 2017. It's now 94 cents. You know why? They don't make money. You know, if you look at you know what other companies IPO'd. You know, if you look at Snap, this is what happens: $29, $6. Now, I'm not saying like, you know, Netflix is going to turn into a Snap or anything like that due to their debt load and the amount of money that they owe. But, you know, Snapchat doesn't make money. They have a hard time making money. And this is what happens when you owe a lot of people money and you don't make money. You know, the thing about Netflix, I mean, they have a lot of people that pay them. Netflix has cash flow. Snapchat, they don't have really any advertisers, and it's hard to monetize their platform, unlike Facebook. You know, whether you like it or not, Facebook has a better platform to make money than Snapchat, even if they have less users. Yeah, Kama's right. Companies with no debt like Facebook don't care about interest rate, and that's why, you know, like the unicorns and when we have bear markets, like 2018 was a red year, 2018 is to be determined. When we have bear markets and we have less money in the market, unicorns like Snapchat, Blue Apron, like all these other ones, all these other companies are overvalued. It's probably, you know, Uber and Lyft it's gonna be really interesting if they IPO this year and what their financials really are. You know, we can only speculate because they're privately held right now. But as they become public companies, people are going to see, okay, how much, you know, you guys seen like articles on Uber on how much money they waste every quarter, you know, billion, 2 billion, 3 billion. It's a lot of money. And this is what happens to those companies that IPO. They're heavily in debt. They IPO because they need money. And now, you know, I don't know if Blue Apron is going to make it. I would probably say it's not. You know, probably going to get delisted. At this point, you're 94 cents. You know, you got to be above, your stock price got to be above $1 if you don't want to be delisted. And it's hit a low of 65 cents and doesn't look like it's getting any better. You know, I don't even know if do they have options? Yeah, they have options, but they're terrible. so I'm not looking at this as an example of trade options. I'm just showing you, you know, what some of these companies that IPO'd last year, 2017, are doing. You know, Sears got delisted. 125-year-old company got delisted after, you know, being under $1. They got dropped. You know, you get dropped from the when you get dropped from the S&P or the Dow or the Nasdaq. You know, if the Nasdaq, the Dow, or the S&P don't want you, you're gonna have a hard time. Not saying you can buck the trend. Like some companies have got dropped from them, recovered, and then got re-added, but I mean, for Sears, probably not going to happen. You know, stuff like that. I feel like I'm just ranting a lot. What do you guys? What other tickers you guys got? If you're new here, say what up. I want to meet you guys. I do want to thank you guys all that have been supporting. I mean, like it's been crazy. Like the amount of support, like amazing. Like we have in the UVH fam, the community that we have here, we have such great quality people. The people that are here, you know, are amazing. You guys are uplifting. I know I said this before, but just amazing. Chetan, we did talk about the banks. All the banks have earnings next week. Keep that in mind, which I might start trading. Just Do Show, what's up? I'm new. Welcome. J Will, what's up? Gush. I don't know what that is. 3 times ETF. Yeah, I don't typically trade a lot of these. I mean, I understand why a lot of people that trade stocks on Robinhood would trade this, but in terms of options, a lot of the times it does price it into the move. So you see this was up like 10% here today, and the options are only up 70%, 100%. It means that move was priced in. And if you're looking at the volume here, the volume is not that great. I mean, it's not bad. I mean, it's 400 and 300, not bad. It just makes it makes it tough to trade. You're probably better off trading SPY or something like that. You know, it's not my preference. I mean, I could see why people that trade this on Robinhood, you know, they don't understand the full power of options or the option pricing. But the options, you know, and you're only trading monthly options, so the liquidity is not as great. You don't have weekly options, so it makes it tough. Karan, what's going on? Walmart. Yeah, I mean, I'm at Walmart's up 1%. That's actually, you know, that's pretty good for Walmart today. You know, I mean, it's pretty good. I mean, it moved 93 to 95. I mean, you had to catch the move. You know, if you bought calls on Friday and got up, let's see what those were worth. Those calls. I mean, not great, but it did give some back towards the end of the day, so that's kind of being impacted. I don't know what the price is at 95. These are probably, you know, it probably would have been. These are probably about 150 to 200% gainers at that point. And the expected move here is $2, and it moved about $2, so it moved up. Disney. I left RH for Tastyworks. Welcome. Wow. Disney. So Disney, I mean, it really didn't do. You know, if you're looking at their stock price here, and I'll make myself a little bit smaller so you guys can see a little bit better. You know, if you're looking at their stock price here, it really didn't do that bad in terms of the purge here. We got, you know, it just came back down. It bounced off the support down here at 100, you know, and this is pretty, you know, it consolidated down here from March all the way to April. You know, 2 months of consolidation in this area, building support. And other thing is, keep in mind, Disney is shifting. They got, in 2019, they're supposedly launching their streaming service. So they're kind of shifting from entertainment / like tech company. Now, if that totally bombs, Disney's going to face some trouble. But if it goes, you know, they have rights to Marvel, they have rights to Star Wars, they have rights to all their Disney films, of course. If they do this right, this could be an amazing opportunity for Disney, cash in, generate more revenue, and also, you know, people are saying, you know, they can't, you know, Netflix canceled Daredevil and all those. They're saying maybe they could be on the Disney service. I mean, obviously that's speculation. There's a lot of things that are complicated about that, licensing and agreements and all that. So, you know, that being said, all that aside, you know, I think Disney at like 100 and stuff is still a good deal. And if you're looking at like the 5-year chart, here, you know, in 5 years, like 4 years, I mean, it had a nice run from 69 up to 95. But in the last 4 years, you know, Disney has not gone anywhere, and it still has not reached a multi-year high in a while. I mean, last time it was 122 was in 2015. So this is 2015 right here, and then we had a big down. The big down move from 122 to 85 is because the market crashed in 2015, and then it recovered, as you can see, you know, after going nowhere. So, you know, Disney's also, the thing was, Disney for a while wasn't a growth stock because, I mean, they have been making moves where they acquired Marvel, they acquired Star Wars, where they're starting to think about the future. But for a long time, they weren't really a growth stock because they were kind of capped out. However, now they have parks in China, and then they have the streaming service. So I would say it's an interesting trade. I'm definitely probably a little bit bullish on it. However, if the streaming service bombs, they're going to be in trouble. They need the streaming service to work. Otherwise, they're going to have to license their content out again, and they'll make more money on their own streaming service. I'm looking at Apple, and the market to pull back a little after the 5-day run we had. Yeah, I mean that's the thing about the market, Rousey, is that it tends to push the limits of what people's normal pain can feel. They really pushed it on the way down. They really put, this might even recover back up to 2,600, 2,700. It might. And they really pushed people's limits all the way down here. And people were looking for, after 5 red days, someone was looking for an uptick. 6 days, they were dying for it. 7 days, 8 days. And they're like, man, we're not getting an uptick. We're not getting a green day. And they really, really, really pushed it. And then what happens a lot of times, from experience and talking to other traders, is after feeling that much, let's say you had long positions on the way down here, you had long positions, you're feeling the pain, you're losing money. Then down here, after you're like, okay, well, mentally, it's like, okay, I can't keep losing money. I'm going to flip to puts. You flip to puts, you flip short, then they bring the market up, and you get hit with the double whammy. You lose on the way down, you lose on the way up. So that's why you don't want to get trapped. You don't want to get trapped on that. If you're losing, it's best just to take a step back and be like, what's going on here? Why am I losing in the market? Why am I not making money today? Why have I not made money in the last month? Why have I not made money in the last week? Whatever the case is. But you don't want to go in and then automatically lose after losing, then flip. This is a prime example of, if you're losing, and then you flip, your account gets a double whammy. You get the double whack, and it's, if that's you and you're watching, I feel sorry for you. If I'm explaining this, I don't mean any harm in it. I'm just trying to make a point that you got to be very, very careful. And if you're losing a lot in the market, it's best just to take a week off, 2 weeks off, and come back fresh. You'll save yourself from the double whammy. Richard, thanks for $10, man. I really appreciate you. You donate every stream, man. You're incredible, man. Thank you so much, Richard. Or should I say Snake Diddy? New here, what's up? Thoughts on GE, new CEO, and talks on selling their aviation service. Is it bullish? I would say not bullish. If you look at like other companies that like sell things off, like Sears, Dave, welcome first of all. Sears, they had to sell the Craftsman brand. They purged themselves to stay in business. Maybe they'll sell their aviation business, but if their aviation business is the one that's making the money, and they're selling it just to, I haven't really looked too much into GE just because there's things that I want to spend my time on other than looking at GE financials. If you're looking at GE, went from 19 down to 6. It's when you sell assets like that and you have nothing to replace it with, eventually you go to 0. You're just delaying your death. You're getting some cash up front, but you have nothing to replace it. I'm bag holding a ton of Ford, January 23rd, 8.5 puts. Jose, did you get the double whammy? Man, well, hopefully for you we'll get a downtick, but it hasn't broken above, like, I would say it needs to break above 875 for us to get bullish to like 950. It has to break 875 to get bullish to like 950 area. So far it has not, so maybe you got that going for you. Obviously, manage risk. I would play some defense, maybe pair it with something else, pair a different trade, trade something else. GE has been selling assets for years and it hasn't helped. There's your answer. Greg with the answer. Thoughts on trade talks on Beijing? Browsy, if you missed the beginning of this stream, definitely hit the replay. We talk about it where, I'm not going to waste a lot of time on this. It's hard to speculate. It's impossible to speculate. It's impossible time. We could have a deal. We could not have a deal. Last 5 times so far, no deal. SLV and JNUG, any thoughts? I think going up. Rocky, what's up? JNUG. Yeah, gold, GLD. Gold's been trending up. If you're looking here, just following it. It depends what you want to trade, but yeah, GLD. If you're looking at gold futures, it's been trending back up. And the reason why it's been trending back up is, precious metals are trading back up. When the market goes down a lot, precious metals, people put their money into precious metals. I'm waiting for a reversal on GE and F puts. Sounds good. I'm hoping Mango Man tweets or says something that'll make the market drop a little bit. Well, you're in luck, Jose, because tomorrow night at 9 p.m. Eastern Time, he's going to be addressing the nation regarding the wall and maybe a trade deal, no trade deal. One thing that I did notice about Trump's conferences, and you probably noticed this too, is he tends to withhold information from if it's bad news. So like when they had the summit with the world leaders a couple months ago, and George Bush died, Trump was supposed to have a press conference regarding the summit and the talks and what was happening. But George Bush died, and he said, I'm not going to do that because I'm going to respect George Bush's family. We're going to not do the press conference. We're going to push it off a couple days. We'll do it a couple days from now. He has still not done that press conference. So, I'm not tinfoil hatting it up here. I'm just stating the facts. And that's what happened. So I try not to, when it's talking about trade deals or walls or anything, the source I would say is not entirely credible. And CNBC, Yahoo News, Yahoo Finance, they just report the tweets. Every day Trump tweets, CNBC pushes a news alert. Well, Trump says this or Trump did that. And if you trade that way, you're literally going to drive yourself crazy. You're going to drive yourself insane. Like you're going to go nuts. So I only rely, when I look at the news these days, I look at, okay, when's the next Fed meeting? Is there election coming up? Is there going to be, is there a war coming up? I'm looking at major news. I'm not gonna stay long Alibaba because a trade war is gonna end. It may never end, so I'm not gonna trade that way. It's just personal preference. So we're at about an hour here. We're a little bit over an hour. Seems like things have been going well with my new PC here. If you got value out of this video in this live stream, tap the like button. If you don't like the video, hit the dislike button. I definitely want to know. But if you like it, it's your first time here, hit the subscribe button. Tap the bell if you want to get notification when we go live or when we post videos. Definitely appreciate everyone here. I'm not going to be live streaming tomorrow because like I said, I'm going to take tomorrow off to be with my son for his birthday. So tomorrow I will not be trading. I might close some trades out. I will post that on the Facebook group and Discord, but I will not be actively trading tomorrow or having a live stream. But definitely appreciate everyone here. It's always us versus herd. You guys have a great rest of your day.